Okay, so good evening and welcome to the session today as we spend some time to, you know, have some interesting discussions as we go into the exam hall tomorrow. And it's been an interesting day for the financial reporting and corporate reporting students. I believe that you've seen what I posted on the Signal platform on our page. And I want you to understand that the IC examination is now, I keep on telling you, the exam, it's going to demand the best of you. And so, as you are preparing to go into the exam hall tomorrow, before I get excited and we get into anything, I need you to keep in your mind that you got to work with speed and accuracy. Time it's going to be something you want to make sure you are mindful of, and then certainly you want to make sure that you understand your stuff because the questions will require you to be the best at the end of the day. All right, so that is just something I want to throw in there for you as you know we looked at what we need to look at today in the discussion. Before I get excited, any questions for me? Something you want to tell me about or ask me about or something like that? Specific, right? Specific. You wanted me to share my thought on before we get excited into the discussion. Okay, so give me a moment. I see who the heck? Tijani, all right. Yeah, Tijani, your one is up.
Yeah, hello, Nhyira, good evening.
Good evening.
Yes, my question is specific to the question one on the budgeting set of questions, where the
When you
level of
say question
activities
one,
are.
what do you mean?
No, you know the sample questions surrounding budgeting that you give us.
Okay.
Yes, there's one with activity levels that are
Right,
in percentages.
right.
You indicated that we should ignore the percentages and work with them as though they are absolute figures.
Yes, sir.
Yes, can you elaborate on that,
Can you
please?
elaborate? Can you elaborate on that? Can you elaborate on that? I'm not debating on anything. Yeah, for you. Okay, let me bring out my slide and let's see. La 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 la. All right. This question, right? Is that what you're referring to? Is it this question?
Please. Yes, please.
Okay. All right. So in this question, you were required to prepare the statement of the budgetary control statement. And so what I meant is that yes, the activity levels given here are all in the percentages zone in that particular case. So you see 75%, 85%, and then 95%. So you're going to ignore the percentages and work in absolute terms. So what does that mean? Now, because there are three activity levels on the budget and the actual is 80, again, you will ignore 82. You ignore the percentage and work with the absolute. So the way you're going to work is you want to look at the cost behavior. And I need you to help me quickly so I can illustrate this to you. So for instance, when we come to the direct material situation, we need to look at the cost behavior on the direct material. So we have 75, 85, and then 95, right? So what I meant to ignore the percentage is that work with the absolute. So it means we will do 9375 over 75. Okay. The next one is 10620, 10625 over 85. Then the next one is 11 Ebaze 875 over 95. So you divide respectively. Can I get a fastest answer, please, just to illustrate this? Somebody give me some answers on this one. What do I have? 9375 over 75, 125. This will also be 125 when you do it. They are 125, 125. So you realize that the direct material cost per activity level, what we just did is direct material cost per activity level. So it's like direct material cost per unit. So if direct material cost per unit remains the same, it means the direct material is the variable cost. Because if you remember one of the fundamental principles in management accounting, variable cost remains, or variable cost per unit remains the same throughout the activity levels, right? And so since it is 125, 125 throughout, what is then going to be happening is that if I need my flex, okay, if I need my flex for direct material cost, the actual activity is 82. So I'm going to do 82 multiplied by the 125 I got here in that particular case. So that is how I get my flex in that case. So 125 by 82, that is 2050. And that's how you get your flex. Now, in the context of this question, you are preparing the budgetary control statement. So you're going to bring the flex, then the actual, then you get a variance for that at the end of the day. So that is what I meant by using the activity level or ignoring the percentages. So you apply or do the same thing for the direct labor, do the same thing for the expenses in that order. Where the cost behavior is not the same, that means it is going to be a mixed cost. So if it is a mixed cost, that means you have to apply the high and low method to split the cost into the fixed cost and then the variable cost. So that is the idea about how you deal with this, Tijani. Does that make sense?
Yes, it does. Thank you so much.
Okay. Yeah, any other thing for me before I get excited? And we are having a combined stream, okay, because auditing, advanced audit is also on the line. So we're going to be going back and forth, and I want you to bear with me, all right, because we can't have a different session for the MA, different session for, so we're going to have back and forth, MA, AAA, that kind of move, all right. So please bear with me as we go so that we can help everybody, because we don't have a lot of time available to, allocate the time separately in that particular case, and I want to make sure that we do what we have to do in that regard. Okay, I'm seeing a chat coming up. What the heck is there? The theories, but we will kill it. Which one is? I don't understand you at this point, Candy. The theories. It's like there are plenty here, but you kill it. That's a good spirit now. Since you kill it, there is a good spirit. Only that, probably. That. All right. So let's go then. Okay, so management accounting, as I said, we have management accounting and advanced audit and assurance. So please bear with me in the way we're going to be traveling tonight. I promise you it's going to be worth it. So please bear with me. We're going to be moving back and forth in that particular case too, so that we can help everybody going into the exam hall tomorrow. I made this statement earlier. Let me repeat it. The ICAG examination has reached maturity. It means the examination is at its best now. So as you are going into the exam hall tomorrow, I've told you this over and over again. Your speed and accuracy very critical. You must know your stuff. Jenny Pako, you are going to be thinking. You must know your stuff. And English language is going to be a problem for many of you. Not because you don't understand English or you don't speak something that sounds like English, but the context of the question, the structure, the verbs of the examiner, based on the context of the question, it's going to be something you want to be mindful of. So as much as you are preparing, trying to wrap up and bring everything together, you want to also put yourself in that frame of mind to ensure that you are going into the exam hall, writing the exam with confidence, and most importantly, pass the examination. So quickly, what I want to do is to first remind us on the structure of the exam. Management accounting first, then we'll go to advanced audit and assurance, okay? So please bear with me, as I said, so that we can go through this. So structure of the exam. As mentioned, depending on how excited the examiner is, when it comes to management accounting, give and take, we're going to have probably up to whatever, maybe a little over 30%, a little over 20%, let me put it that way, of the questions being theory. Last semester it was like 21-ish, 22 or so, whatever the heck. But a little over 20% or 30% of the questions will be written questions, whilst the other areas will be the calculation questions. The question you want to ask yourself is, what the heck are the written questions that the examiner is going to be getting goosebumps on? We spoke about some of these things in that particular case. Sustainability issue, right? The IT issues, okay? We discussed the various IT issues. Then we spoke about the models of evaluation, okay? Models of evaluation. I told you that under the models of evaluation, last semester, the examiner got goosebumps on the, whatever the heck. Was it throughput also in that particular case? Yeah, I think so, if my memory serves me right, whatever the heck. But models of evaluation, this is where we are talking about benchmarking, total quality management, just-in-time system, value chain analysis, environmental accounting. Those theories, those are under models of evaluation. You want to be mindful of that. Then certainly ethics. Ethics, pretty important. Now, these are the exclusive theories that we can really talk about in management accounting. So sustainability issues, the IT issues, models of evaluation, just-in-time, benchmarking, total quality management, environmental accounting, value chain analysis, those babies, those guys, exclusive. However, under each of the topics which will go under calculation, which will include topics such as variance analysis, right? Variance analysis, budgeting and budgetary control, what the heck, performance measurement, short-term decisions, all right, short-term decisions, and then management accounting techniques used in the public sector. So these are the calculation issues. But under each of these, there are theories. We've spoken about this. Under variance analysis, there is a theory on objectives of standard costing. Number 2, the types of standards. Ideal standard, current standard, attainable standards, the types of standards. Then number 3, the behavioral aspect of variance analysis, which is the causes of variances and what the entity must do. Again, the quality of the exam is at its best. So gone are the days if you have been solving, looking at the past questions. That's not what you're going to see tomorrow. You're going to see matured questions, questions that make you feel that, yeah, you've learned or you suck. So those theories under variance analysis, you want to make sure you review them. By now, you have. All other things being equal. Under budgeting, the models, approaches, or types of budgeting, incremental budgeting, zero-based budgeting, activity-based budgeting, program-based budgeting. Read them. It's a theory the examiner can ask you. Then certainly the processes of preparing the budgets. Heck, the difference between functional budgets and a master budget. We know that the functional budgets are the budgets that are prepared or budgets that represent the, let me take that again. The functional budgets are the budgets of the various departments within the organization. So it includes the sales budget, the production budget, the material usage budget, all of those kinds of things in that particular case. So budgeting. Then the master budget, cash budget, budgeted income statement, budgeted statement of financial position. You got to make sure you understand those written parts around budgeting. Performance measurement, bobo. We brought in balance scorecard there. And I told you that although the balance scorecard is under models of evaluation, we discussed it under performance measurement as well, how we use the balance scorecard to evaluate the performance of the organization. We discussed it. Some of you were, obedient to write analysis and send, and we looked at it for you. So we looked at the balance scorecard, then the Fitzgerald and Moon building block. That's there. Then certainly the concept of transfer pricing. So as you are doing, I keep on telling you, as you are doing the calculation, there are theories there. Same thing happens to short-term decisions. Under each of them, there are written questions there, like break-even analysis, right? Assumptions of break-even analysis, limitations of break-even analysis, uses of break-even analysis, right? And the relevant costing. Write short notes on the following, or distinguish between sunk cost and opportunity cost. Those kinds of things. And the relevant costing is a theory area. Then the management accountant or management accounting techniques apply in public sector. We got a lot of theories there that we went through, if you remember, during our discussion. And so this is our exam structure. We're going to have some theory issues coming up. You have to make sure you understand them pretty well, and then the calculation issues very well. And as I say always, you want to make sure that as you go into the exam hall, it is how can I get some free marks as early as possible before I get excited to get into certain things. Number one, you want to make sure you read all the questions and answer all the theories. Then from there, you can start with your calculation areas in that particular case. So exam structure as we go into the exam hall tomorrow for management accounting, just remember again, these are the things that we are looking at. Now, if you remember, we spoke about the various sustainability issues or sustainable cost management issues and discussed them in detail in relation to the role of the management accountant when it comes to dealing with sustainability issues. Then we came to the IT development, the various technological development that are available, its benefits and all that, cloud accounting, big data, and all those things. It's there. The examiner could ask you because it is part of the written part that you need to be mindful of. So that is our exam structure that I quickly want you to, again, remember. So as you are studying, you're going to crystallize yourself pretty well at the end of the day. And that's what you must understand there for the structure for management accounting. When it comes to advanced audit and assurance, our structure is pretty simple. We know this already. Number one, we're going to be having a question on ethics. Okay? Ethical issues. All right? And this is 10 marks probably in the exam hall. If you remember, we spoke about the style of questions available to the examiner when it comes to the ethical issues. And so we mentioned that either the examiner will bring a scenario-based question where you would have to find out what threat the audit firm or the person in question is exposed to, what is the significance of the threat, is it at a firm level or individual level, what code of ethics is being breached, and then what safeguards must be put in place in order to mitigate or eliminate the threat or the ethical dilemma. So the answering or write-up guidelines we gave on the way you answer ethics questions in the advanced audit and assurance class, you make sure you review that before getting excited into the exam hall tomorrow. So that is the first style of question on ethics that the examiner can bring to us. Then the second style of ethical or professional issues were some of the things that we spoke about in relation to the role of ICAG in ensuring that professional accountants act in a manner that preserve, or if you want, protect the accountancy profession. And we discussed a couple of questions under that style of question as well when it comes to ethical issues. And so these are the two styles of questions that one of them will be in the exam hall. If it is scenario based, you know the way you're going to dance. If it is the other professional type of question, we've given you a blueprint on some of them that you have to be mindful of. But that is the first thing, ethics. The second thing is we're going to have a done deal 20 marks question coming up on audit procedure. It's a done deal area, pretty well, 20 marks waiting for us. And we've spent enough time on this. So you don't have a problem. Unless otherwise you were living under the rock in the last 12 months, 12 weeks. We spent a lot of time on how to answer questions involving audit procedures. It is going to be there for you. So number one, ask yourself, okay, what accession am I testing for? All right. Is it a transaction? Is it an event? Or it is an account balance at the reporting date? That will guide you on the accession that you have to test for. Then AEIOU will be at the back of your mind. And so what accession am I testing for? Okay, this subject matter issue, is there any accounting standard that governs the way it should be treated? So when you know the accessions to be tested for, the accounting standard that apply to the event in question, then certainly you can come in with a procedure you can undertake in accordance with the AEIOU, analytical procedures, comparing data to find trend changes so that you can identify patterns, inquiry from management internally and those charged with governance, or externally from the bank, if you want, lessors, if the company has leased an asset, debtors, and then creditors, if we are auditing any of those things. So we may make inquiries internally or externally. Inspection, looking at documents, right? Looking at documents. And so we can obtain maybe the board minute or the management minute to look at it, or get the contract that an entity has signed and look at it. Observation. This is where the professional accountant or the auditor sits down to look at how things are done within the company. So attending an inventory count is observation. The physical examination of assets. If you are dealing with non-current assets, physical examination of the asset could also come under this area in that particular case. Then a walkthrough process, or what we call the vouching process, also will come under this area that we need to understand in that particular case. Then recalculation and reperformance, because there are some of the things that the auditor must recalculate, okay, to see if what has been done by the entity is right or wrong at the end of the day. And so for this area, once you read a question, you got to ask yourself, what accessions am I testing for? Is it occurrence? Is it completeness? Is it cutoff? Is it valuation? Is it right? Is it existence? Is it obligation? Is it allocation? Is it whatever am I testing for? Is there any accounting standard guiding this subject matter issue? Then AEIOU, what procedures can I undertake? If you remember, I told you that between inquiry and inspection alone, you can get your procedures 99.9% of the time. Because no matter what we are doing, we have to ask a lot of questions about it. No matter what we are doing, we would have to inspect some documents in that case. So between inquiry and then inspection of documents, we can have a lot of procedures coming in that particular case that we have to be mindful of. And so that is audit procedures, 20 marks coming in from us for us in the exam hall. Number 3, it's going to be audit reporting, 15 marks. If the examiner get goosebumps, then he will do you 20 as well. So 15 minimum. So audit reporting, if you remember the various things we discussed there, know the pro forma of the audit report. The examiner will not ask you to prepare an audit report, but he may ask you to critically appraise an audit report or critically assess or evaluate an extract audit report. And so the pro forma of the audit report and what has to be represented or written in each paragraph of the audit report is very important. And so you make sure that you are mindful of that. Number 2, in accordance with ISA 705, modification of the independent opinion of the auditor or the modification of the opinion of the auditor in an independent audit report. What are the guidelines? 3 things: materiality, pervasiveness, ability of the auditor to gather sufficient and appropriate audit evidence. And so if you remember, we said if the subject matter is material but not pervasive, then we issue an except for opinion. If the subject matter is material and pervasive, then we issue an adverse or a diverse opinion. If the subject matter is material, pervasive, and the auditor is unable to gather sufficient appropriate audit evidence, then the auditor is going to issue a disclaimer opinion, which says, I cannot express any opinion on this financial statement. And so audit reporting, the audit report, modification of the audit report, pretty important that you have to make sure you understand that. Then we come to the issue in respect of the other activities that are carried out, subsequent events, goodwill, then other information. Make sure you go through them pretty well because the examiner is going to be hitting you one way or the other under audit reporting, and that is part of our structure. Number 4 is the public sector. Okay, and there is a 20 marks here, as you know already. The first one is the types. The second one is the other encumbrances that we spoke about pretty a lot. And there are 3 types of audit in the public sector: financial audit, performance audit, compliance audit. One of them will be there, or all 3 will be there for 10 marks. All right. And then the other areas, 10 marks. INTOSI, okay, the role of INTOSI, and then the Auditor General, Internal Audit Agency, Public Accounts Committee, all of those guys, you make sure you are familiar with them in that particular case. So ethics, audit procedures, audit reporting, public sector auditing. Then suddenly we come to number 5, governance, which is 10 marks. Right? Corporate governance. And we've exhaustively discussed this and discussed questions on this. So corporate governance issues, 10 marks, also waiting for you in the exam hall that you need to understand when it comes to advanced audit and assurance. So ethics, audit procedures, audit reporting, public sector, the issue about governance in that particular case. And so if you look at it here, you realize we have 20, 40, then we have 60, then we have 75. Now, the remainder of the areas will be some of the other issues that we have spoken about, like acceptance of engagement and those other introductory issues. Okay, the other introductory issues. Then certainly sustainability, auditing, group auditing, non-assurance services, all of those other areas in that particular case. So when it comes to the structure of advanced audit and assurance also, this is what you need to be mindful of. Again, the examiner is going to bring the best out of you. I'm saying this respectfully. Only intelligent people can pass the examination. It's not an insult. That is the reality, because the exam is at the level where you have to be prepared. Number 1, you need to have a certain attitude. Number 2, and you need to think in a certain way. Number 3, to pass the exam. And if you have been working over the last 12 weeks, then you'll be part of the intelligent people, certainly. Certainly. Again, I'm saying that respectfully. For somebody come and say, hey, you're insulting us that we are not intelligent. No. Please, take your ego away. I don't care about your ego. I'm just telling you. This is what is required. Respectfully. Okay. So once we've looked at the structure of the exam, let's get goosebumps into the various things. So number one, variance, management accounting, variance analysis. There will be a question on this waiting for us in the exam of 15 marks, maybe 10 on calculation, 5 on theory, or 15 calculation, then the examiner will bring a 5 marks topping on theory, or no calculation or theory. So the examiner can calculate the variances, then we'll ask you to interpret the variances. And this is where the behavioral aspect of variances comes in, okay? So why is the direct material price variance adverse? Explain. What should we do? It's a very beautiful question that the examiner can just whisper into your ears. And you realize that, holy cow, you toasted, but you don't have to be toasted. So under variance analysis, 15 marks minimum in that particular case. If you remember the last discussion we had on variance analysis, we tried to bring everything together to help you to understand what is going on at the end of the day. But when it comes to the calculation aspect of the variances, you bear in mind those, basic principles, that the material price variance is based on the actual material that has been bought and used, right, during the period. The material usage variance is based on the actual units that has been produced during the year, right? Then you come to the fact that number 3, the direct labor rate variance. This is based on the actual hours that we paid for during the year. 4, direct labor efficiency variance. This is based on actual units produced. Okay? Actual units produced, taking into consideration actual hours worked. Right? With actual hours worked. So that when there is a difference between the hours we paid for and the hours we worked, then we will have the idle time, right, variance, which is simply the difference between the hours paid and the hours worked. Sounds good? In that case. So again, premise, right? Now, the structure of the questions, we've addressed all of them to the best of my knowledge. The default one, where you are given the standard cost card, and then you are given the actual, you calculate the variance. The reversal approach, where you have the variance and the actual, then the examiner says calculate the standard. Then the last question we solved during our revision session, there was no standard cost card, but the examiner listed the item. And so there were things we had to derive on our own. That is the type of questions that the examiner can bring. And you have to know how to play around all of those questions. And Nuntina, we did them in class, because that's my job, to show you the style of questions that the examiner will bring. Then you can know how to approach each question. So which style of questioning the examiner is going to be bringing, we don't know. So you can chew your baba, memorize your formulas, but if the style of question beats you, you toast it. But we know the normal one, we know the reversal approach, we know the listed approach. Then preparation of the operating statement. The last question we solved during our revision session. Make sure you go through that pretty well as well in that particular case. Then you come to the overhead variances, right? Under the overhead variances, we said it depends on the environment we are in and what exactly we're going to be calculating. Okay, so we said that, okay, if we are calculating the variable overhead expenditure, this is going to be based on the actual hours, okay, that people worked for the period. So how much we have paid based on variable overheads? How much did we actually pay? In all that. The variable overhead efficiency variance. What did we say? We said it just worked like the labor overheads, the direct labor efficiency. The same ideology. So you can just go pick the difference from the direct labor and use it to just multiply the variable overheads absorption rate per hour. You get your answer there in that case. Then you come to the fixed overheads. Under the fixed overheads, you have fixed overheads expenditure. The fixed overhead expenditure, we said, is the simplest one. So you just bring your budgeted overheads minus the actual overheads. That's all. Then we have fixed overheads volume variance. Again, that's pretty simple. You just bring your budgeted units, subtract your actual units produced. Be careful. The last question we solved during our mock session, you remember that the actual unit produced was different from the actual unit sold. So when we are doing this calculation, we are dealing with actual units that has been produced because you are in fixed overheads. Then you can multiply that by the fixed overheads absorption rate per unit. Okay, the fixed overhead absorption rate per unit to get your answer in that particular case. So that will be the overhead, variances for the most part. But remember also the volume variance can be splitted into efficiency and capacity variance as well in that regard. So again, this is your go-to on the way you pick the items up. Finally, you come to the sales variances. Pretty simple in that particular case. With the sales variances, what are we saying? We are having sales price. This is based on the actual units sold. And so for the actual units sold, how much should we have received in terms of revenue? How much did we receive? Pretty simple. Then the last one is the sales volume variance. But if you remember, we said, the sales volume variance is your budgeted sales unit. Okay, budgeted sales unit. Compare that with our actual sales unit. Then you get your difference here, but the difference is in units. So you're going to be multiplying that by the standard profit if you are in the absorption costing environment, or standard contribution if we are in the marginal costing environment. So you got to be mindful of that. So if the examiner asks you to calculate sales volume profit variance, then you are in the absorption costing environment. Sales volume contribution margin variance, then you are in the marginal costing environment. So that is the idea about what you need to understand when we talk about some of these variances in that particular case. 15 marks coming for us in the exam hall. 99.9% of the time, whether I like it or not, you're going to do these. Whether I like it or not, you're going to do some of these things. But we can take this a step further for the final part, and that is if the entity is using more than one raw material to produce the product, then the direct material usage variance will further be divided into the mix and then the yield variance. If you remember the concept carefully, we said that if we are doing the mix variance, what do? You just bring your actual quantity in standard mix. You bring your actual quantity in actual mix, get your difference in here, get your standard cost per kilogram, then you get your variance in the last column there. And the trick is very simple. Let's say we are using two types of materials, X and Y. The actual material that was used, that's what you are bringing here. Get a total. Then you bring that total to under the actual quantity in standard mix. Then you use the standard ratio to share this. And that is what will give you the actual quantity in standard mix to be able to then get your difference in that case. We will be required to do this if the entity is using more than one material, and we are supposed to calculate the material mix and material yield variance, because the mix variance is telling us about the efficiency of the management in production manager in mixing up the resources or the input in order to get the output that we got during the period under review. With the same idea, you go to the yield variance. If you remember, we said we can do the yield variance in total, right? Do the yield variance in total, which means you just bring the total material that was used, the figure that you're going to be bringing here under the actual quantity in actual mix. How many units should we have produced with it based on the standard mix? How many units did we produce? Then you're going to take that, because you are in material, you're going to take that at the standard direct material cost per unit. Remember that calculation very well. We did it in class. So it is the standard direct material cost per unit. And that is if we are doing the yield variance in total. But we can also do the yield variance for the individual products in that particular case. Again, if you remember that for the individual material, we're going to have the actual quantity in standard mix coming up. Then you're going to have actual quantity in standard quantity in actual mix. And this is the should have used. So the way you get this is the actual units produced, right, multiplied by the standard usage. So you are multiplying the should have, you are comparing the should have with the actual quantity in standard mix, which you got from the mix variance here in that particular case. So remember those calculations, and then the workflow goes, and knowing how to do the comparison and knowing, okay, this is adverse variance and favorable variance. Please note, in the variance analysis, whatever you calculate, your final answer must have the currency in front of it and what the heck it is. Whether it's favorable or adverse, you have to put it in bracket. Please, if you do the calculation without stating that, oh, this is F for favorable or this is A for adverse, you have not said anything. That is wrong. That is wrong. So please be careful. Pay attention to what you are doing. Do not get over excited and go screw yourself up. Please. Please. And so those are the calculations areas. But remember, we said we can put all these together in the operating statement preparation. Please make sure you go through the pro forma of the operating statement that we shared in the, what is this? Variance analysis, right? In the variance analysis document. So please make sure you go through the pro forma to remember how you're going to be dancing in the marginal costing environment, what you're supposed to bring. Then in the absorption costing environment, how you're supposed to work yourself out. So that is variance analysis. Again, either we will have a question like what we solved during our revision discussion, where the examiner will say, prepare operating statement, which is this thing. In that case, you have to know, I have to calculate all the variances that has to be calculated based on the context of the question. Then you now prepare your operating statement. If you are supposed to do reconciliation, then you have to prepare your actual income statement as well, so you reconcile. So be mindful of that. Or the examiner will just bring some things and ask you to calculate mix and yield variance or quantity variances. Or the variance you'll be calculating will just be overhead variances. Or we have the variance, we have the standard, calculate the actual. Or don't even calculate anything. We've already calculated it. Please interpret it to management. And that's the part I love, because that is really what variance analysis is about, not these calculations. You can do these calculations, but what do they mean? That's what management, that's what variance analysis is about. When we a calculation, Chirimo, explain it for us. And so that style of question is also available. And that is the behavioral aspect. So knowing, reminding yourself, okay, if the direct material price variance is adverse, what does it mean? What are the causes? How can we fix it? Those kind of things which we discussed whilst we were solving the questions and discussing variance analysis, you got to be mindful of that. So that is the 15 marks area on variance analysis that we have to know about. Any questions on this? Any follow-up question on this? If you have anything that you want to seek clarity on that I've not mentioned, I've mentioned everything though, but per my brain. So if there's anything you want to seek clarity on, you can put it in the chat or raise your hand, I'll bring you up or something like that for me. Sales mix. Okay, yeah. So if the entity is selling more than one product, then the sales volume area, okay, the sales volume will be splitted into the sales mix and then the sales quantity variance. Now, if you remember, I said that the idea about the sales mix variance is just like the material, the material mix variance. So we're going to have our, if we are doing the sales mix variance, you're going to be having the same idea, okay? Like actual quantity in standard mix, actual quantity in actual mix. So you're going to bring the actual sales for the product. So whatever are we selling? What should we sell? I don't know. We should sell some condoms and sanitary pads. So how many did you sell actually? That's what you're going to bring here. Then you now use the standard sales ratio to split the total to get the actual quantity in actual mix. Then you get your variance. But remember, this is in revenue place. So it don't have the same interpretation like material. But the calculation is the same. But the interpretation is going to be different in that particular case. So that is how you calculate the sales mix variance. Now, the way we do sales quantity variance is pretty simple. It's one of my favorite, like personal favorite variances. Is the actual quantity in standard mix. Then you bring the budgeted sales unit, which is the standard quantity in standard mix. So it's just the budgeted sales unit. That's it. So remember the actual quantity in standard mix, you did it here. So that's the same items you are bringing. Now you are comparing that with the budgeted sales unit to get your variance. So this is the did and this is the should. Right? But remember, you are in sales. So you must know when it is adverse, when it is favorable. Because you can get arithmetics right, but if instead of adverse, you make it favorable, instead of favorable, you make it adverse, and also, where do you go? Oh, then I won't bring the adverse and favorable, and also where do you go? You don't have any shortcut. It's not like you have a choice. All right, so that is the idea in that particular case. In the mixed variance, the same thing. This is the did, and this is the should. You get the idea? So should and did, so you get a variance. But remember, you're in a sales environment, so if the did is more than should, then that is favorable in that particular case, and you work it out. And then if you're in the quantity variance, did and then should. And this time around, you are bringing budgeted sales unit. So that is the idea about the sales volume if the entity is selling more than one product. So immediately you realize that the entity is selling more than one product. You have to calculate the sales mix and sales quantity variance in that particular case. So Gilbert, that's the sales. Was that Gilbert? Yeah. That's the sales mix situation. Let me know if that makes sense for you, or if there are any follow-up. The behavioral explanation there. Hey, what has it done, Candy? These are simple stuff. Why is material price variance favorable? Why is it adverse? Like, these are KG2 stuff you're expected to know about. KG2 stuffs you're expected to know. Okay? But you have to know about them. You know, the dangerous thing is that you know you are supposed to learn something, but you don't learn it. Then you go to the exam order and it is there. Right? So, please familiarize yourself with it. You'll be good. All right, so that is the variance analysis part, 15 marks. And please, in addition to all these, the theories, types of standards, ideal standard, attainable standard, achievable standards, and current standard. Then the objectives of standard costing for stock valuation, identification of efficient and inefficient areas in the organization, for performance evaluation as well. So know about 4 of them offhand. Then certainly the last one, reasons why a variance will be favorable or adverse. I don't know why, but I feel that I would love a question where you are not doing any calculation in the variance, you are just doing the analysis. Like that's the best type of variance question. And it's a type of question that over the previous syllabus, there was nothing like that. But if we look at the way the ICA exam is getting better, a question like that will not be a surprise. So you're not doing any calculation. Just write English for me, for the examiner. Then it will be nice. All right. I know you are praying certain questions don't come. Stop praying, because that is not God's job. Learn. And stop worrying God in that particular case. Other than Nhyira, which English? Which English? Don't you understand English, Candy? Are you not an English-speaking person? Don't you speak English at home, at work? I say, which English? My English. Shame on you. All right, so that's variance analysis in that particular case. Then let me come to AAA. I don't know, because I think AAA, I'm having probably just 2 people on the call here. I don't know, whatever the heck. Let me come to AAA here, because I want to contextualize AAA. Where the heck? Sorry. Sorry if you feel dizzy. AAA. Those of you doing AAA on the call, is there any area here you want me to pick my brain? You want me to talk about? Although I gave an executive summary during the syllabus structure review, is there anything here that you want me to share my thought on? Because I think there are just 2 people or so doing AAA here, so I don't know. Is there anything here that you want me to expand on? Because I already did an executive summary during the syllabus overview. If there's anything here that you want us to talk about here. Also then, everything in AAA. Candy, you're not doing AAA. Which one is everything is in AAA? You're not doing AAA. So why are you setting agenda for the AAA people? Advanced audit. Ana minjai na min komenim. Generally. Right? Mean China mean common. Maybe let me talk briefly again about this area, the governance issue. 10 marks question coming up. If you remember the discussions we had there, give me a moment. Let's see if I can draw the slide on that 10 marks area. Indiana. Give me a moment. Let me see if I can see the governance issue and go through it. If not, then I'll just do a executive summary in my slide. Yeah, this is what I'm looking for. Right. So the key issues here in the governance will include the governance model. You don't worry. Let me go into my writing slide so I don't have to spend a lot of time here. So when it comes to the governance, we are saying that this is how entities are directed and controlled, period, right? But what are the key issues here? I will say that even if you have review the question we discussed during our revision session, the governance question. Because if you remember, in that question, I comprehensively walked us through the entire syllabus, right? So please review that question. Like, go rewatch that video. We have put a sample of it under the summary video, so you don't have to go through the whole 3-hour video. So under the summary videos, you see corporate governance practice questions. Click on that and watch that video again. I don't know how long it is though, but I don't know. You can watch that video. So please, for governance purposes, watch that video again, because the key areas that we have to focus on this 10 marks area will depend on the type of question that the examiner will bring to us. And there are 2 types of questions, as I've said here. Scenario-based governance question, which is what we did in class, which is the video I said go and rewatch again, where the examiner will ask you to find out what are the governance issues in this question for 10 marks. For 10 marks. So scenario-based, what are the governance issues? Or the examiner will hit you with something specific. So the governance code. All right, the corporate governance code. We have the what? Let me take it again. We have the listed entities, okay, by Security and Exchange Commission. So the corporate governance code issued by the Security and Exchange Commission. Then governance code based on the Companies Act, okay. Ghana's governance code. Please remember the various parts of the governance code and what they talk about. If you remember, we spoke about this. So if you come to Ghana's code of best practice, the role of management or the role of the board and their responsibility, composition of the board. If you remember, we said the board, majority of the board members should be non-executive directors. At least 1/3 of the non-executive directors should be independent non-executive directors. You remember we also spoke about the reasons why the role of the CEO and the board chairman should be splitted, so that the CEO will be an executive director, ED, and then the board chairman will be a non-executive director, a NED. Right? And then we spoke about the importance of having the independent non-executive directors on the board. Then various committees of the board, especially the audit committee. That's a generic question. It may not even come under governance related, but it's a generic question that the examiner can ask you, because the audit committee plays a key role in our job as auditors. So what are the roles of the audit committee? What are the roles of the nomination committee? What are the roles of the remuneration committee, and then certainly the risk management committee. So the committees of the board and their roles, please know them off head. Right? Pretty important there in that particular case. So the corporate governance codes, the composition of the board, then payments to directors. Very important. There are 3 guiding principles that you must know about. Especially if we are looking at the scenario base, there could be payment issues that you would have to comment on. If you remember the question we discussed during our revision session, there was a pay structure that we kicked against, and we suggested that best practice makes the provision that the pay structure of the directors should be competitive, should be performance oriented, and should have some stock options in there. So please make sure you understand these things. And it's purely reading area, right? So you must understand all of these things generally in that particular case. So composition of the board, the role of non-executive directors and independent non-executive directors, the role of the board chairman and the CEO, those guys. 10 marks will be waiting for us in the exam hall, either a scenario-based question or something specific about governance that the examiner would want to pick your brain on in the exam hall. So that's the 10 marks area on governance. I don't know, but I think the examiner, if I was the examiner, I would fall in love with a scenario base because it's just nice, because it brings the best out of you. If you are really somebody who has read corporate governance pretty well, then the scenario base, you'll be able to excel there very well. But if the examiner doesn't go there and he asks you something specific about the corporate governance codes of Ghana, or about the role of the various committees, or the role of non-executive directors, or qualities of independent non-executive directors, please, all of these areas are things you have to read, because either we will go scenario based, or the examiner will go scenario based, or comes with a generic where you are writing something specific. Listen, there are no ideas here. There are no ideas. It's either you are writing what is there that you have to write based on your understanding, or you are totally going to be writing something that cannot be marked or looked at. So corporate governance, 10 marks area, either scenario based, like what we did in class, or we are going to be having the generic questions where you are dealing with some of the key issues. Then symptoms of poor corporate governance. You remember we discussed this as well. What are some of the indicators or signs which when you see, you realize that, oh, this entity is having poor corporate governance? Maybe single domination on the board, or a handful of people are the ones making decisions. That may be a symptom of poor corporate governance. Lack of supervision, that may be a symptom of poor corporate governance. There is no balance on the board. Maybe there are a lot of executive directors on the board, and the board is not briefed regularly. There is no transparency by management. That may be a symptom of poor corporate governance. There is no annual general meeting, so communication with shareholders is not coming forth well. That may be a symptom of poor corporate governance. Lack of or absence of internal audit or audit committee in a company could also be a sign of poor corporate governance. And so those things are all things that you have to know about when it comes to symptoms of poor corporate governance. Again, all those are weaved into scenario-based questions that we have to be mindful of. So for that 10 marks area on governance, those are the areas that you want to optimize yourself on as you go into the exam hall for the advanced audit and assurance in that particular case. Then we come to second part of MA, which is budgeting. Huge area, right? Huge area. So when it comes to budgeting also, there are a couple of options available to the examiner. Number one, is the preparation of a flex budget, which was there last semester. That doesn't mean it won't come again, okay? I'm just telling you. Number 2, preparation of the question that Tijani asked me, right? Give me a moment. Let me show you that again. The question that Tijani asked about a moment ago, the statement of budgetary control. No, not variance, Nhyira. Budgeting. This one. Budgetary control statement. Okay? That's another calculation statement. Now, as I said, it is simply you comparing the flex budget with the actual, so you get a variance. So, budgetary control statement. Number 3 is functional budgets. The preparation of the various functional budgets. Now, you know the functional budgets, these are the budgets of the various departments within the organization, right? So the functional budgets. So the sales budget, you don't need miracles on the sales budget because the sales unit will be given. But what you may need deliverance on, based on the context of the question, is the price. Is the price. Because the examiner can bring a funny, I'm air quoting that, right? Funny language on the price issue. For instance, let me show you something here. There is this question. Let me see. I don't know if I can find it. Yeah, this particular question. Jatochrome. Look at it. It says that a unit of Zimbi is sold for 10 Ghana cedi. 10%, conventionally, the selling price of the product changes every other month by 10%. Every other month by 10%. One go school and a boy the answer we won't say. Every other month is different from every month. If it is every month, then it means the 10% increment will be what? Monthly. Every other month means every 2 months. And so if you look at what is here, it says that the last time the selling price was increased was the immediate month preceding the first month. The immediate month preceding the first month. So technically, month 1 is here. So the last time the price was increased was around 0. So our increment in price will start from 2. And so in year 1, you will use the 10, but from year 2, you're going to be using what? 11. So these are the nuances about selling price. And in management accounting, if your English is not good, you're already gone. When I say you're already gone, I don't mean you have passed. You are toasted. So the English language, not the English you speak, not the one you think you write, but the English language in the context of management accounting is a different flow here. So you got to be mindful of how you play the English. So the units, no miracle, but the price, there could be some nuances there. Got to be mindful of that. Then you come to the production unit budget. This is how many units we must produce in order to meet the sales unit. Remember, in the production unit, we build into the system defective output, right? We build into the system defective output, generally in that particular case. And you remember the way we do the workflow for the defective output. From there, you come to the material usage budget, which is again prepared by the production department. Remember, when you are preparing the material usage budget, we must build into the system normal loss, or if you want, wastages. Again, I want to refer to something, but I've forgotten that thing. There was something I want to bring to your attention. Don't worry, I'm going to remember before we close. So you build into the system normal loss when it comes to material usage. From there, you go to material purchases budget. This is by the procurement and the store department to determine how many materials should we buy in kilograms and in currency. So it's in units, or if you want kilograms, and also in what? In value, currency. This is where you bring opening material, or you bring material we are using for the production. You less your opening, you add closing, then you get a material that we have to buy. From there, you come to the labor budget, which is also going to be in hours, which is usage, and then also in currency. The usage is prepared by the production manager. The labor cost budget is prepared by the HR department. You have to know which department is responsible for what, again, because of the written part. Because the examiner can just ask you, write short notes on the following: production budget, material usage budget. That's all. Write short notes on the following. Fala. Nice. And so in the labor budget, the hours, we have to build into the system either idle time, which will increase the hours we need, or labor efficiency, which will reduce the hours that we need. Then when it comes to the cost budget also, we may have to build into the system overtime premium where it is applicable. All these depends on the context of the question. If your English is bad and you are not able to read and understand what there is going on, that's it. The downfall of many students in management accounting is their inability to comprehend the management accounting questions. It's not that they don't understand the topic, like comprehension. And I say this like respectfully, it's not that you don't understand English. We've gone through this over and over again. It's that you are thinking about it separately or differently from how you are supposed to have thought about it based on the context of the question. Sounds good? So English language, you're going to be fighting tomorrow. I hope and pray that it will be a good fight, that you will win. But those are the functional budgets, preparation, and the various things that we need to take into consideration. Then certainly number 4, the master budget. Okay, which is where you're preparing the budgeted cash flow, income statement, and statement of financial position. The beauty is that we've solved question on that as well in that particular case. So on the calculation part of budgeting, these are the options available to the examiner. Either he will hit you with budgetary control statement, or the functional budget, or the master budget. And we are doing all that for 15 marks. And time may not be on your side, and so speed and accuracy is going to be very important there in that particular case when it comes to these calculations areas in budgeting. You may go to the exam when there is no calculation question on variance or on budgeting, as I said, and everything will be theory. It's the examiner's swag. Don't take it personal. All right? Because some of you, there are things you are expecting. Your expectation will be shattered when you open the questions. Because it is not about what you are expecting. It's about what is in the syllabus. Because nobody cares about your expectation. Is it in the syllabus? Then the examiner can bring it. So your goal should not be, oh, I'm expecting this. No. Forget your expectation. It is what is in the syllabus. You can apply expectation to other aspects of your life, not to the ICA exam. Because in the exam, the examiner has only one responsibility. What do I have in the syllabus? Okay, under budgeting calculation, these are the options I have. What do I want to bring? He will select one of them and bring. So it's not about what you like, what you expect. It's about what is in the syllabus. So you make sure that you review all of these, know them pretty well. In addition to this is the theory issue that we spoke about earlier that you must be mindful of, the types of the types or approaches of budgeting: incremental budgeting, zero-based budgeting, activity-based budgeting, and those guys. So that's also about budgeting and what you need to understand there in that particular case. Any follow-up on this, on the budgeting area? Something that I didn't mention that I should talk about, or whatever the heck I can let go and everybody good here? What do we have? Okay, it means everybody is good. Thanks be to God. Amen. Let me see. Okay. So that is budgeting and budgetary control as well in that particular case. Then suddenly we come to short-term decisions. You know, there's a lot of material that we have to go through there. Short-term decisions. As I said, I mean, you don't know what the heck the examiner is going to be bringing here, but there's a lot. Last semester it was limiting factor analysis and a little freestyler on relevant costing analysis in the question 1B aspect. Just a little freestyler, but not a full relevant costing issue in that case. But under the short-term decisions, these are the things we have. Cost volume profit analysis. I think that was what we looked at, because if you understand break-even analysis, that is the base for the marginal costing principle, and then you can apply the marginal costing principle across all of the others, because really you are looking at the marginal costing principle under each of these short-term decision make issues: throughput accounting, right? Shutdown decisions, pricing decisions, which is a theory area in that particular case. I believe everybody is strong on each of these decisions. Oh, look at these plenty things. Which one am I supposed to learn? You're supposed to learn all. Okay? Supposed to learn all. Know all of them. And if you have been learning by now, you don't have any problem. Is there anyone with any question under any of them that you want me to share my thought on? Something specific under any of the short-term decisions? Because I will not really go through them, because break-even analysis, we discussed the various things there. Relevant cost analysis, we are taking into consideration just the incremental cash items, right? So sunk cost will not be considered, historical cost will not be considered, carrying amount of the item will not be considered, absorption of overheads not relevant to us, general fixed cost not also relevant to us. So we are going to be dealing with cash flow item. Depreciation is also not relevant to us. So we are going to be dealing with incremental cash flow items, right? Like specific fixed cost will be considered, like the issue in respect of how we deal with when it comes to how do we call it, opportunity cost will be relevant as well. Then determining the relevant cost of material and labor under each of the question tag concepts. Okay, that's relevant costing. Make or buy, we discussed that as well. We are looking at, should we produce the product in-house or buy it from outside in that particular case? Then you work yourself out in that regard so you know what you're supposed to do. Throughput accounting ratio, very basic issue there. We said throughput is the selling price minus direct material cost, if you remember. And we mentioned that all other costs will be treated as the factory cost. Okay, all other costs to be treated as the factory cost. Again, we went through that, so you want to make sure that you are familiar with that. But the interpretation of the throughput, okay, if it is greater than 1, it means it is profitable. Let's continue to produce it. If it is less than 1, it means it may not be profitable, loss making, so probably we should stop producing it. If it is equal to 1, then what is going to be happening is that we are going to be needing or requiring further investigation when it comes to the throughput. But remember, the examiner can ask you, theory area, what are the ways that an entity can improve the throughput accounting ratio of a product? And if you remember, we said we can increase the price, but you don't get up and just increase the price of a product. You must consider the market within which the entity is operating. Is it operating in a perfect competitive market or a monopoly market? If it is a perfect competitive market, increase in price will not be successful, because when you increase the price, the people may go and buy from your competitors, because there are many suppliers, there are many buyers in that case. If you're in a monopoly or monopolistic market, then probably you can increase the price because, hey, people will not have any choice. But there is also a downside to that. Then the second thing you must consider when you are looking at increase in price is the elasticity of demand of the product. If the product has a perfectly elastic demand, it means that a small change in price will lead to a more than proportionate change in quantity demanded. And when it is perfectly inelastic, then a small change in price will lead to less than proportionate change in quantity demanded in that particular case. So when you are saying increase the price, those two things must be highlighted in your explanation. Then they can reduce the direct material cost by buying in bulk, switching with suppliers, renegotiating price with suppliers, reduce the direct material cost. Then the factory cost, like the direct labor, the fixed cost, all those two could be reduced by the entity. So that's also another theory area in throughput accounting that the examiner can access when it comes to dealing with the throughput accounting ratio. Then shutdown decision. Should we close it down or keep it going? All right. We say we compare the foregone revenue or foregone contribution with the avoidable cost. That is the cost savings if we should shut it down with foregone revenue or foregone contribution. That is the comparison or basis for the shutdown decision. So that if we find out that the revenue we are foregoing or the contribution we are foregoing is greater than the avoidable cost, we won't shut it down because we are losing more. But if we realize that, the revenue is less than the avoidable cost, which is the variable cost of operating that particular segment of the business, the specific fixed cost of that segment of the business, those are the relevant costs you are considering there, and you compare that with your foregone revenue or the loss contribution. That is how we make the shutdown decision as well in that particular case. So that's the principle there about shutdown. Again, in all these, you are seeing that we are applying the marginal costing principle, except throughput, because throughput accounting is in its own world. Because the difference between marginal costing and throughput is that in marginal costing, it is assumed that in the short term, costs can be classified into fixed and variable cost. But in throughput, the assumption is that in the short term, the only cost that is variable is the direct material cost. That's the assumption, is the direct material cost. That is the only cost that is considered to be a variable cost in that particular case. So all other costs are treated as period or fixed cost and are written off against the throughput in that particular case. So that is what we must understand when we talk about the throughput accounting ratio as well there. So those are the things generally under the short-term decision. At least one of them will be in the exam hall that you need to be mindful of at the end of the day. As to which one that is going to be there, that's on your own dancing move in that particular case for you. What do I have? The multiple product environment, especially break-even point in unit. Yeah, that is very simple if you're calculating break-even point in units for multiple products. We spoke about this in class. Break-even point in unit for multiple products. We said the first thing you do is to calculate the contribution per unit for each of the products, right? Then number two, you calculate the contribution mix, which is going to be the contribution per unit you just calculated. Then you multiply it by the sales mix. Do you understand? So that's the second step, contribution mix. So the contribution per unit for each of the products multiplied by the sales mix. So if, again, we are selling whatever, condoms and sanitary pads, and the sales mix is 5:3, then you calculated the contribution for the condom, and it is $2. You calculated the contribution for the sanitary pad, and it is $3. So you multiply that by the sales mix, respectively. That is what gives you the contribution mix. Okay? Then number three, you calculate the break-even point in mixes. And that is going to be your fixed cost divided by the contribution mix from the step 2. So that gives you the amount in mixes. Then after that, you can now come to step 4 to calculate the break-even point in unit for each product. And that will be the mixes you got in step 3 by the sales mix. Okay? The mixes from step 3 multiplied by the sales mix for each of the products. That gives you the break-even point for each of the products. And that's how you calculate the break-even point in unit for the multiple product environment. Very simple, right? Very, very simple. So you realize that if you pay attention closely, it means if you screw up, say, step 2 or step 3, everything else is au revoir, mon ami. And the same thing happens to the budgeting discussion we had. Say you screwed up the production unit. Everything else is au revoir, mes souhaits. You get 0. You get 0. Like that. 0. And so, and you're going to have that a lot in management accounting where it's process. And so the results will be moving gradually like that. So if once you screw up something, everything else you screw up at the end of the day. So you got to be mindful. You got to be mindful. Short-term decision questions like, sorry, let me come back. So, Candy, that is the issue about a break-even point in unit, multiple product environment. Let me know if you are okay with that, because I think that was what you were talking about. So, contribution per unit, contribution mixes, break-even point in mixes, which is fixed cost over the contribution mix you did in step 2. Then you now calculate the break-even point in unit, which is the answer you got in the step 3 by the sales mix. Like the example I gave, 5:3. You're going to multiply the mixes by 5 to get for the condom, by 3 to get for the sanitary pad. And that's how you calculate the break-even point in unit for the multiple products. And like if you pay attention, you realize that none of these are difficult. Okay? They are not difficult. Like if you get a principle, it's easy. It's easy. Oh, sure, you don't know. You're saying that it's easy. You don't know. Sometimes the examiner will make the question shuku. It's because your English is not good, period. Your English is not good. That's all. That's why you can't understand the question. Because comprehension is the fundamental thing to passing the exam. So if you read a question and you can't even understand the question, au revoir, mon ami, for you. Like you toasted. So those are the short-term decision situation there. Is there any other issue? Oh, I think that is all. 1 or 2 of these guys will be there. And there are a couple of theories also here. Outsourcing decision, right? Sorry, it's under the make or buy. Factors to consider before we select a supplier. Those theories we discussed. And then the risks or disadvantages of outsourcing. Those are theories that the examiner can throw at you under the make or buy decision as well. Because once we have done the financial thing, then there are some non-financial issues we need to consider. That is the quality of the supplier, the reputation of the supplier, the lead time that the supplier is giving us, and all of those other issues that we have to be mindful of. So that is short-term decisions. One of them will be there, and you have to know about it. How beautiful is the feet of those who bring the gospel. All right, next thing is, let me go to AAA and pick something from AAA. Then we can come back. So AAA, what else can I highlight on largely? Let me see. Audit procedure, I don't want to go there again because, we've spoken about it in its practice. So I don't want to go into the audit procedure. Let me go to the public sector part for a little expansion on the 10 marks area done deal on the types again. Let's do that quickly. So we said there are 3 types of auditing in the public sector, right? Advanced audit and assurance people. The first one is the compliance audit. All right, compliance audit. What is a compliance audit? We said it is an audit that is carried out after the covered entity has undertaken a project, right? And we want to, sorry. That's a performance audit. Let me come again. Compliance audit, it's an audit that is carried out to determine whether the operations of the entity are in line with the laws, regulations that governs the organization. Number 2, their own internal controls, are they adhering to them? And then number 3, directives from other regulatory authorities. That is compliance audit. In other words, is this company being run in accordance with the laws, the acts, the regulations set out to govern how the company or the covered entity is supposed to be run? Number 2, is the entity following its own internal controls? Because the company would design, or every covered entity has internal controls in place as to how things are supposed to be done, who is supposed to award contracts, who is supposed to pay for things. Are they following it? Then number 3, directives, sometimes from the Ministry of Finance, Controller Accountant General, Auditor General. Are you getting it? Or the RCC, the Regional Coordinating Council, or whatever the heck. Are they following these directives? That is compliance audit. And so we mentioned that when the Auditor General and his people are looking at compliance audit, there are a number of key areas or key issues that they want to look at. Number 1, we said, is the awareness level of the people working in the company. Do they know the law? That's the first thing. Awareness level. Pretty important in that particular case. The second thing that the Auditor General is going to be looking out for is, all right, has there been any non-compliance? So are they aware? Number 1. If they are aware, why are they not complying? That's the second level. Then the third level is, what are the consequences for non-compliance? If they didn't comply, what happened? Did it affect the financial statement in a way? Has it affected the operations of the entity in a way? If somebody is supposed to be punished, did they punish the person in the manner that the person is supposed to be punished? Then the last one is, making a recommendation on what they have to do in that particular case. Making various recommendations. So that is the first thing, compliance audit. We are looking at the operations of the entity. Is it in line with the laws, the regulations, their own internal controls, directive from Ministry of Finance, Controller Accountant General, Auditor General, and all of those? That's compliance audit. Very sweet, simple, straight to the point. 2, it's performance audit. That was what I was getting excited about earlier. So this is where a certain activity has been executed or undertaken, and we want to find out how it was undertaken. For instance, they are recently holding, they launched the economic whatever dialogue. I've forgotten the full name of that thing, which was launched today. It's a 2-day event also at the Accra International Conference Center. So when they finish that, somebody can come up and say, hey, this is a waste of money. Let's find out how much money was spent on that thing. Or Parliament, you heard about them going on a training workshop in the Volta region, which the minority has boycotted because they said it's not following cost. This country, Ankasa, there is a lot of concert party in this country, but we move. So that training that the Parliament is going in for, when they finish, we can do performance audit on it. What are we looking for? A number of things. We are finding out whether procurement was done in accordance with the Procurement Act. Okay? So the procurement of the goods, works, or services in line with the Procurement Act, or with approval from the procurement authority. Did they follow? So the hotel that Parliament is hosting the event, how did they procure that hotel? Was it in line with the Public Procurement Act? Or did they follow the law in selecting that particular hotel? Or it was a single source and somebody has chopped money at the back? Performance audit. Number 2, did we achieve value for money? Did we achieve value for money on that training? So it could be anything at all. Maybe we've constructed a road, we've constructed a hospital, we've built a school. Okay, for this road, for this hospital, for this school, how did we award the contract? Is it in line with the procurement laws? Is it in line with the guidelines from the Public Procurement Authority? All right, this school that we have built, or hospital that we have constructed, did we achieve value for money? And you remember, value for money in the public sector is the 4 E's, right? Economy, that is procurement of goods, works, and services at the least price as much as possible without compromising quality, right? So how did we procure the inputs? At what price did we pay for the input? That is economy. Efficiency has to do with the relationship between the input and the output, ensuring that we get the best possible outcome from the input that has been used. Effectiveness, whether the project that has been undertaken or the activity that has been undertaken is achieving its intended purpose. That is effectiveness. And then certainly equity, whether there is a fair, distribution or allocation of resources at the end of the day. And so under performance audit, that's what we are looking at. It will come up because the entity has undertaken an activity. They are done. They have done a project. They've completed a project. Now, Auditor General comes in and say, hey, listen, I want to find out, how the heck did you guys do this? Did you meet the procurement laws? Who is breaching some laws? Can we sue somebody? Did we achieve value for money? Was this too much? Did some people chop some money? That is performance audit. So you realize that in the realms of the spirit, if you are doing performance audit, there is an element of compliance audit in there, right? Because you are finding out whether the project that has been undertaken, did they do it in compliance with what? The Public Procurement Act or guidelines from the Public Procurement Authority. So there is an element of compliance audit in there, but it is on a specific activity, not on the operations of the entity. If it is about operations of the entity, we are looking at compliance audit. But if it is about a specific activity undertaken by the entity, then we are looking at performance auditing. Then certainly the last one there, it's going to be financial audit, as the name suggests. This is the third one. So in financial audit, this is where we are reviewing the financial statement of the covered entity in question, right? We are reviewing the financial statement of the covered entity in question. And so in financial audit, we're going to have the measure of compliance and performance audits coming in here. And this is where the normal audit procedure issue that comes in the second part of the 20 marks area on public sector that we're going to be looking at. So one of these will be in the exam hall, or the three will be in the exam hall for 10 marks for the advanced audit and assurance examination, and you have to be mindful of it. Right? You have to be mindful of it. Remember, we solved some questions in class, discussed the issues in respect of attestation, engagement, and then direct engagement, and all of those things. So please be mindful of this. 10 marks on these three items waiting for you in the exam hall. Either just one of them, the examiner want to get goosebumps, or the examiner will ask you to write on all three for the 10 marks area. The second part of the public sector is what I was talking to you about, which is other issues, pretty a lot of material there that we need to understand. For instance, the role of the various, the roles of the various personnel or institutions in Ghana, like the Auditor General, the Public Accounts Committee, the Internal Audit Agency, the Audit Committee, the Internal Audit Department. Okay, all of these people, the examiner could ask you about their roles. You need to know about it pretty well in that particular case. Then, as we said, according to the 1992 Constitution, there are specific provisions made for the Auditor General as the head of the Audit Institute in Ghana. And so we must know about those things, that, hey, he has a right to have access to all the books. He must audit financial statements. He must present his reports to Parliament on time, right? Then he must also bring to the attention of Parliament and users whatever financial irregularities identified during his audit. And so about the Auditor General, pretty important there. We need to make sure we understand that. Then certainly the generic issue about, the procedures involved in various activities. Okay, so for instance, there was this scenario that we discussed. I think it was only one person who wrote an answer about that we mentioned, the National Cathedral situation. You should carry out procedure on the National Cathedral, and it's a generic question on that other 10 marks area that the examiner could ask us that we must know about. So on that generic area, there are a lot of things there. If you remember, we discussed the role of INTOSI, okay, the International Organization of Supreme Audit Institutions, right? The INTOSI. It's the equivalent of IFAG, where ICAG is a member of, for accountants. For public sector auditing to the international organization is INTOSI, and the Audit Service of Ghana is also a member of that. So the role of INTOSI, we discussed all of those things. It's an area that we need to be mindful of, because the examiner can visit us also there. So when it comes to that public sector auditing 20 marks area, these are the key issues that we need to understand. Please remember these three things. One of them will be there, or all three will be there, that you have to be mindful of. Then the other aspects of public sector auditing, remember, audit reporting is still here. We went through it. Assertions that we are testing for is the same thing here, except that there is one assertion we introduced, which is compliance. Right? But the other assertions are the same as in the private sector. So we'll look at accuracy, we'll look at completeness, we'll look at occurrence, we'll look at valuation, we'll look at rights and obligations, we will look at cut off, okay? We'll look at existence, all of the other assertions that we know in the private sector. In the public sector, when we are carrying out procedures, we will test for all of those assertions, depending on whether it is a transaction on an event, or an account balance at the reporting date, or it's a disclosure or a presentation issue. So the assertions are the same whether we are in the public sector or the private sector. The only thing is that in the public sector, there is one key assertion that we have to test for, which is compliance, because everything done in the public sector must be done in accordance with specific laws. Like if you're awarding contract, you cannot just get up and award a contract. You cannot just get up and go buy things. You have to buy the things in accordance with the Public Procurement Act or receive authorization or guideline from the Public Procurement Authority. If not, then there is no compliance there in the first place, and you've breached a rule and you will be punished for that in that regard. So on this 20 marks area public sector, these are the things that we need to understand. 20 marks, audit and assurance, that we need to be mindful of. Any questions for the audit people who are on the call? If there is any follow-up on any of these areas that you want to pick my brain on, I will be able to share my thought on that in that particular case. Let's see, I'm seeing some comments coming in on. Okay. So everybody good. What else can I talk about in management accounting? Let's see. We've done the variance, we've done budgeting, we've done short-term decisions. What else? Performance measurement. The question one. That place, if you remember, we said the examiner has a lot of options there for us in the exam hall. Okay. Number one, either we are doing organizational performance. Okay, performance measurement. Or we are doing divisionalization. And under divisionalization, there are two things there. Divisional performance measurement using the ROI and then RI. That was what came last semester. And then divisional performance using transfer pricing. No, under divisionalization, transfer pricing. Calculating the transfer pricing for the entity. So either the whole organization's performance or divisionalization. Now remember, under the whole organization performance, which is an area that probably the examiner could get a goosebumps on tomorrow morning or whatever the heck, there are a lot of things there. Number one, either the examiner will present us with a financial statement, so we calculate the ratios and what? Interpret the ratios. So you are doing ratio analysis here, and we've discussed this. We solved some ratios and asked you to write analysis. And, as always, the people who write will write. The people who not write will not write. As I say always, I just hope that, as you are going into the exam, or if there's a question like that and you're supposed to write an analysis, you write something that can get you the marks that you're supposed to get from that question. It's just a hope that I have at the end of the day, because, you can't multiply zero by anything at the end of the day. The second aspect is under the organizational performance is where we are going to be using the balance scorecard. If you remember, again, we solved a question about this. So we can use the balance scorecard to evaluate the whole organization's performance. Financial perspective, customer perspective, internal business perspective, learning and innovation. We discussed that and how that fits into performance measurement. We solved the question in class, discussed that in class pretty well. That is another option available to the examiner when it comes to that organizational performance situation as a whole that we need to be mindful of. Or the examiner will come in with a service organization where it will ask us to use the Fitzgerald and Moon building block. Again, we discuss the Fitzgerald and Moon building block as well. Not Moon, Nhyira and Moon building block. All right. Dimensions, standards, and rewards. Remember, there are 6 dimensions that we can measure: profitability, flexibility, utilization of assets, quality. Those are the dimensions. The standards, we said that there are 3 things that the entity must take into consideration when setting standards. It should be achievable, right? Very important at the end of the day, because you cannot set a standard too high. Otherwise, it will discourage people. Too low, it will also motivate people. So the standard should be achievable at the end of the day. Number 2, we also said that there should be some level of equity, right? Because you cannot just set a standard for one group of people and it wouldn't apply to others. So the standard set should apply across all the departments within the organization. So achievable, equity, and then ownership. Actually, ownership is the first one, which is the fact that the people who are going to be responsible for the standard must be involved in what? Setting the standard at the end of the day in that particular case. Then we come to rewards, right? Under the rewards also, we said there are 3 things that we must consider when setting the reward. The reward should motivate people, right, at the end of the day. Then controllability. What the people must do to get the reward should be within their control. So we spoke about the motivation. We spoke about controllability. What was the last thing? What was the last thing under reward? Mine is not coming. Where did it go? What's the last thing under rewards? Who remembers? You've used it to chew chewing gum. You've used it to chew chewing gum. How can you even say that? You've used it to chew chewing gum. What's the last thing under standards? Sorry, rewards. Oh, whatever. What? Clarity. Okay, thank you. Clarity, yeah. So the reward should be clear to the people. We must know, hey, if I'm going to achieve this, what am I going to get? Da, 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 da. So Fitzgerald and Moon building block, the balance scorecard, ratio analysis. So the whole organizational performance, that's an option there. Divisionalization, performance, ROI, RI, or transfer pricing when there is a limiting factor, when there is no limiting factor, the way you are supposed to calculate the transfer price, the various questions we've solved. Make sure you're familiar with that. And then certainly, number 3, performance measurement in NGOs or not-for-profit making organization. Not-for-profit organizations. You remember that there are 2 things we spoke about here. When it comes to not-for-profit making organizations, the way we measure their performance is using the value for money concept, which I discussed a moment ago. Economy, efficiency, effectiveness, and then in some cases, equity will come in. So that's the criteria used to measure the performance for not-for-profit making organizations, because there is no money there that they are going to be making. And so the objective of not-for-profit making organization is to maximize the wealth of the shareholders. Maximize wealth, Nhyira, is to maximize the welfare of the beneficiaries. Okay, not-for-profit making organizations maximize the welfare of the beneficiaries. So we're going to be using the value for money concept. And then the second thing is the problems associated with evaluating the performance or performance measurement in the not-for-profit making organizations. So if you remember in our question kit, let me see if I can bring that up just to remind you where that material is. In our question kit, In our question kit, when you go to performance measurement, in page 32, you see objectives of transfer pricing. That's a theory the examiner can ask you, and we discussed this, right? And then the problems of performance measurement for not-for-profit making organizations. That's also a theory the examiner can access. And then the evaluation of the value for money criteria for performance measurement in the NGO. So that is available in your question kit, and you can refer to that briefly from page 31 of the management accounting, our main question kit in that particular case. So in that question one area, those are the things we are looking at. Either the whole organization's performance, ratio and interpret, balance scorecard, Fitzgerald and Moon, or the concept of divisionalization. Remember, under the divisionalization, we solved the question on payment of bonuses to the directors based on the RI that they got. Again, the context of the question, the one we did in class, we're supposed to calculate annualize RI and annualize ROI, but we were given only 1 month. So we had to multiply that by 12 to get the annual. Context of the question. Context of the question. Because you screw it up a little bit, you toast it. You toast it. All right. Then, so be mindful of that. Then the transfer pricing issue. Then the not-for-profit making organization. So in that question one area, those are some of the things that we need to understand in there, in that particular case. I don't know, is there anything here, the MA people, that you would need some clarity on, or everything is good here? Because I mean, we've spoken about these things and I've discussed some of them with you already. So what the heck? Is there anything here that you are concerned about? This is question one. A, okay, because sometimes the B aspect comes with another question that doesn't relate to performance measurement. Sometimes it will be another question, it doesn't relate to performance measurement. But those are the things that we must understand there in that particular case. So question 1A, 15 marks, or if the examiner gets goosebumps, 20 marks in that particular case. Also then, it's even A. Yeah. Sometimes this is A for 15 marks, so that the B is 5 marks on something else. Another theory area that the examiner could throw at you in the exam hall. Sounds good? So other times the whole thing is 20 marks, and it's all about performance measurement that the examiner is taking your brain on. Like, let's say we get a balance scorecard. So you can have 10 marks question to explain how the balance scorecard can be used to measure the performance of an organization. 10. Question 1AI. 10. Then you get AII, something else. Then you get B coming in to complete it up. So remember that very well, because balance scorecard, you could be asked to explain it. So that the same way you could be asked to use it to evaluate the performance of the company. Again, as I tell you always, we've discussed these things, and I've also told you how the examiner will set the question, the options available to the examiner, so you know what to do at what point at the end of the day. So that's the question one area there, and what we need to be mindful of as well. Okay, so looks like everybody good there in that regard. In auditing, let's see, what else can I share? In auditing, AAA, we've done the governance, we've done the public sector issue already. I've spoken about reporting as well, right? Amendment of the modification of the audit report, the pro forma of the audit report. I've spoken about that already. Then the ethics part, okay, the ethics part, remember the way the question will be answered. Maybe let me just highlight on that a little bit for that 10 marks area on the theory part for ethics, 10 marks. And so we come to the ethics, that 10 marks area. Remember, if the scenario is written down the way you are supposed to write out the answers. We said that you take your time to read, and then you have to identify the threat. Make sure you connect it with the code of conduct being breached, right? Then you talk about the level of the threat. Is it at the individual level, meaning it's an individual who is exposed to the threat, or at the firm level, meaning it is the audit firm that is exposed to the threat? Then the significance of the threat. Remember, we said the significance of the threat depends on a number of items, the materiality of the event, but most importantly, number two, the seniority of the staff or the staff involved. So as I use this example always, let's say we have two people on the audit team, right? One person is an account trainee, just completed ICA or university, and is an account trainee. And then we have the engagement partner, okay? The engagement partner, who is the head of the engagement, okay? So we have these two people, and they fall in love with somebody in the client's company. So the account trainee now abana obesuya de no wakohu no nice, and he has gone to fall in love. Account trainee, when you are supposed to be doing learning, she's rather chasing things. So the account trainee falls in love with whoever, maybe the accounts officer or something like that, in the client entity. Ooh. Now that it's going to bring in familiarity traits. Okay? That's familiarity trait. Now that familiarity trait means that the account trainee is likely to breach, the objectivity principle, and will not be honest and straightforward about something. Because hey, if you love somebody or you are hating on somebody, if you see that they've done something wrong, I mean, you cannot say it. Yeah, you're gonna be quiet because you are trying to win her over or win him over, that kind of stuff. These days, women also chase guys in that regard. So familiarity trait, objectivity will be breached, professional behavior, because you're not supposed to fall in love by heart. Okay, you fall in love, but you have to tell your superior that, sir, I'm sorry, but I think I've fallen in love. Please take me out of this engagement. Boom. Then you neutralize the threat in that case. But if it is there and someone else has to find out, that's bad. So familiarity threat there. Then our boss himself also has fallen in love. Ooh. With who? I don't know. Maybe the CEO's daughter. Okay? So at a meeting, at a board meeting, the CEO daughter came. The engagement partner saw the CEO daughter now. He said, oh, what a beautiful girl. I love you. My future is in your hand. Then he has fallen in love with the CEO's daughter. Oh, nice. What do we see there? Again, you've fallen in love, familiarity trait. The CEO's daughter, it's likely to be an intimidation threat also there. Why? Okay? Intimidation threat. Management and accounting people, ethics is in your syllabus. So what I'm teaching here is applicable to you. So don't close your ears. Ethics is in your syllabus. So what I'm teaching is applicable to you. Only that the format of the write-up is different in your context, and I'll contextualize in your case. But the explanation is applicable to you. So falling in love with a CEO's daughter, familiarity trait. Now you are familiar with the person. Now this is the CEO's daughter. So if you see something wrong and you want to discuss it with the CEO, like, you can't, Charlie, this is your father-in-law. in the making. You're going to tell your father-in-law that he has fraudulently presented a financial statement. You toasted. Give me a moment. Somebody's jumping on my call. I don't know who the heck that is. Okay, you don't worry. So, familiarity threat, intimidation threat there. Okay. Are they all significant? Hell yes. The engagement partner who is the boss, who has fallen in love, this threat is at the individual level and it is very significant. Now, the account trainee who has also fallen in love, familiarity threat, that one is not significant. Why? Because whatever the account trainee does will be reviewed by a supervisor, which will also be reviewed. Okay? Because the account trainee is not a key, it's not a decision maker on the engagement. The account trainee will not decide on what has to be done, whether the evidence is material or not material, the evidence is enough or not enough. And so the account trainee's risk is not significant. But our boss, engagement partner, that one is significant. So what are the causes of action here? How do we mitigate this risk? For the engagement partner, he must be removed immediately from the engagement, and whatever he has done so far should be reviewed by an independent reviewer and replaced by someone else at the end of the day. So that will be the action we take. And then certainly, he must be referred to the disciplinary committee of the audit firm if they have something like that, because you're not supposed to do that. Now, it's not that you're not supposed to fall in love or you're not supposed to enter into a relationship. Once you encounter something that will affect your professional behavior, that may cause you to breach the fundamental code of conduct, best practice says, come and say it. So if the person comes and say, oh, I'm sorry, I'm part of this team, but Charlie, you don't know where you meet your lover. I've seen the CEO's daughter, and I must say that there is nothing I can do, but I want to marry her. I want to go out with her. I want to see her more. Then, and he comes out to tell the audit firm, fine, he's done the professional thing. But say wanka, na say ye be hua, and no na. Because remember, that means we may not do quality audit, and later on, somebody can sue us for that. So potentially, there is a future legal action available. So that will be a significant risk there. But the account trainee is not significant. So we don't replace the account trainee. The account trainee can be allowed to continue their work, but could be also hailed before the disciplinary committee of the audit firm for some sanction. Because who the trainee? Trainee, who they love there? Please, it's a joke, okay? Don't take it personal. Nhyira doesn't respect. The fact that somebody is a trainee does not mean that he doesn't have capacity to marry. Do you know how much money the person? It's okay. It's okay. I'm just making a statement. Go with you. Go with you. So trainee, they all they love there. So the trainee will not be replaced, but will certainly be hailed before the disciplinary committee so that something like that doesn't happen again. So that's the idea. Now, for those of you in management accounting, if we are putting this in the position about ethics issues, scenario based, yes, you're going to be writing the threat. We went through this. So you're going to be identifying the threat. Then you look at the code of conduct being breached. That's all. Okay. So in our case here, it wouldn't be an engagement partner and an employee. It will be the management accountant. Okay. So if let's say that the management accountant is put in a position where he is supposed to, so this is MA people, but it can also apply to the audit people as well, since ethics is here all the time. So let's say that the entity is going for a loan from the bank. All right. Then they are requiring a budget for, 2 years budget. And so you, the management accountant, you are preparing the master budget, which has to be sent to the bank for the loan. That is a cash budget, budgeted income statement, budgeted statement of financial position. And then your CEO tells you to include certain things in the budget, which you know as a management accountant should not be included because it will be misleading. Now, there are two things here. The CEO has promised that, hey, listen, if you do what you have to do and we get this loan, you're going to get promotion. If you get this thing, we'll increase your salary. Number two, not only that, the money from the bank will help us to, retain employees, so there will be no employment. So your colleagues will have their job retained. So what is the ethical issue here? Now, the management accountant must not be associated with any statement or report that is misleading or fraudulently presented, because that may result into the breach of the principle of integrity. Now, the issue by the CEO to him, your CEO telling you that's an intimidation threat, and that may affect the objectivity of the management accountant. Two, the promise of promotion or increase in salary is a self-interest threat, because now the management accountant stands to benefit if the bank loan comes. Now, that self-interest threat now may result into the management accountant breaching the fundamental code of objectivity. So his judgment is going to be impaired, so that he may fraudulently present the master budget to the bank, which is also against the principle of integrity, because as I mentioned earlier, the management accountant should not be associated with any statement, report, or any information that is misleading, that doesn't represent the true and fair view of the entity. On the overall, that promise there and the threat from the CEO is making the management accountant behave in a way that he is not expected to behave, which is a breach of professional behavior, bringing shame or disgrace to the profession. Then the second layer of the fact that, hey, this loan must come, otherwise we will sack people. That is undue influence, which is under intimidation threat. So can you stand it so that your righteousness will cause the company not to get a loan as a management accountant, so that we do a reorganization? Can you stand it? That's undue influence. So that pressure, that guilt, that the management accountant may be contemplating on, may cause the management accountant to fraudulently present a master budget that is misleading at the end of the day, and then affect his objectivity in the preparation of the master budget. So that is just a scenario. 5 marks. Management accounting students, ethics. That examiner may visit you there, because ethics is in your syllabus. So that's just a freestyler on how your ethics is in management accounting. For advanced audit and assurance people, we identifying the threat. What code of conduct are we breaching? What is the level? Is it at the individual auditor's level or at the firm level? What is the significance of it? Is it significant or not significant? Usually it will depend on the materiality of the issue. And again, as I mentioned, the person involved. Like the example I used here, the account trainee is not significant, although they have committed the same crime, air quoting that as well. The engagement partner's own is more significant because he is a decision maker in that case. Then what should be the course of action here? And we've stated what we have to do in the audit. In the management accounting environment, what should be the course of action in this ethical issue that we discussed? Number one, the management accountant must insist that the budget presented is not misleading, is not fraudulently represented. Very important, which means the management accountant must educate the CEO the importance of preparing a master budget or a budget to the bank that truly represent the entity to prevent him and the organization as a whole from any possible future lawsuits. If that doesn't work, certainly the management accountant can seek advice internally from the audit committee or outside the company from the ICAG, legal advice or professional advice. But when the management accountant is seeking advice, he must be aware of the confidentiality principle to ensure that essential information are not disclosed to third parties without prior notice at the end of the day. And then if the issue is not resolved, the last resort will be the management accountant should resign in that regard. But as we say always, are you resigning to go and say it, or you are resigning to keep quiet? If not, Agbalagba can come after you, because you can't be the hindrance to our progress as a company. So since you are resigning, you and your God should go. We'll throw something at you as you are going in that particular case. Yeah. In a real business world, when you face issues like that, you don't just get up and say I've resigned. You have to apply wisdom. So those are the ethical issues in management accounting and also in the auditing. So in management accounting is 5 marks, in auditing 10 marks, and you see the variety or the diversity in the two areas, although they are covering the same thing in principle. But the way we write out our answers and the perspective will be different. That is the idea about that. I think my time is, far gone. I'm going to wrap up here so that I leave you people to go and, freshen up, sleep a little bit, and then you'll be good in that particular case. So I think I'm going to wrap up around here today, in that case, for us as we move ahead. Let me just bring you up again. So the ethics, audit procedure, audit reporting, public sector, governance, and the other issues, man accounting, sustainability, the IT issues, the models, right, ethics, and then under each of the topics, as we have done, there are theories in there. You want to be mindful of that. My advice, generally, best practice for MA first. Let's do MA first. For management accounting, you know what the heck I'm going to say already because I've already told you. You want to make sure you read thoroughly all the questions. So read all the questions. All the questions. Then you take out the written ones that you can answer best first. If the examiner is gracious to do like 30% of written questions, that's lottery for you, man. I can guarantee you that's lottery, bro. If you have read the theories and you have about 30% theories, that's lottery. You just won a jackpot. So you quickly want to take out all the theories. The only thing is that do not answer 2 separate questions on the same page. So you cannot answer question 2B and then question 3A on the same page. No. Once it's a different question, go to the next page, go to the next page. But my advice is read all the questions, answer the written questions that you can do best first. Take them out. Then you can start with the things that will require you to think. Short-term decision, variance analysis, budgeting, the management accountant technique in the public sector, then the question 1, performance measurement, whatever is there, based on what you are going to be doing generally. Please, speed and accuracy will be important in management accounting. If not, by the time you hear 2 hours gone, you have answered 2 questions. And there you failed the exam. There is no magic. You failed. So please, go with speed and accuracy. Okay? Make sure that if there is a question you realize that you are spending too much time on it, it means you can't do it. Put it aside and go somewhere else. And Nuntina, I said, read all the questions thoroughly. So that you know that, okay, I can do this question. But even if you you start doing it and realize that Charlie idea and go ye, then you leave it and go away. If under short-term decision you are dealing with relevant cost analysis, then that one if you read a certain footnote and you can't work it out, you can come to this next footnote and read, because chances are the items are different. But if you're in other type of short-term decisions like maybe throughput accounting or make or buy or shut down or break even, you realize that the results of one step may run through, or you are in budgeting, you are preparing functional budget. You screw up the production budget, you're going to screw up everything else from there. So you have to be careful based on the context of the question. This is English language, but not your English language, but it is management accounting English language. So take your time, read, move with speed and accuracy, work on your emotion, make sure you're of your best state as you go into the exam hall. And I've told you this already, that is what you need to do. My recommendation, as I said, take out the written questions that you can do best first. Read them. When you go, it will be there. Answer them. The ones you can do best first, take them out. Then you can go to budgeting. You can go to short term. You can go to variance. You can go to the question 1. You can come to the public sector issue that will be there for you. That's my recommendation for the management accounting. As I said in the beginning, the quality of the exam is now interesting. The people who wrote the financial reporting and corporate reporting I've had talks with a number of the students. We had chats and other things, and there are variants. Like, everybody seems to have different ideologies about what is going on, but when I look at the questions, I'm like, yeah, this is what I want to see. Very beautiful questions, quite loaded questions. Speed, accuracy. If you don't know, you don't know. If you know, you know. So please, get your acts together. Go in there, work with speed and accuracy. Please ensure that when you get to the exam hall, like, format your calculator, right? I thought I had my calculator here. Format your calculator. Then, when you are working through, format it regularly, because sometimes your calculator can start fooling, because the memory becomes something else, then it will start producing wrong answers. Got to be careful about that as well. So you format it and then make sure that it's working well, so you don't write wrong answers. Although you are doing the right thing, arithmetically you are wrong. You are still wrong. So please be mindful of that as well. For advanced audit and assurance students, you know what the heck you're supposed to do. Your question is a written question, so you know what the heck you are supposed to do. Read through all the questions. Yes, ethics will be there. If it is the ethics you want to start with, take it. Governance is there. If that is what you want to start with, take it. Audit procedure is going to be there. If that is what you want to start with, take it. So when you read the questions, based on your strength, you start with what you can do in that order. Remember, this is a written paper, so you want to make sure you read the question well to understand the context of the question. All right? You read a question well to understand the context of the question, to make sure that you are writing out the answer that you have to write based on the context of the question. Please, don't go and write anything. And you know what I mean by that. Your procedures must be in simple sentences. Your answers must be in simple sentences. Nothing shorthand. Don't write anything that will require somebody to ask, what do you mean? Then the last thing is, when they say 15 minutes to stop work, go over the writings that you have done. And this is applicable to the management accounting students also as well. 15 minutes to stop work. Just take time and go over, especially the written questions that you have written, because you have experienced this before, when in your brain you were writing something, but on paper, what you were writing or what you wrote was just contrary to what you thought you were writing. And you're going to suffer that. It's a normal thing. And so that is why you have to review your work. Even the calculations ones in the MA, get ready to stop work. You want to quickly see and review. I know you're going to say, oh, 15 minutes to stop work. I could have used it to answer any question. Do whatever that pleases you. I am telling you what you have to do, because sometimes an is or a or the or something, it's not in an expression, it's not in a statement, then you toast it. So just be careful. 15 minutes to stop work, put the pen down, quickly go over the things you've done, just making sure that you understand what you are doing, and what you wanted to do is what you are writing generally in that particular case. So that is what I would say there, for your examination, and we wish you all the best as you go into the exam. As I mentioned, please make sure that you take time to read the questions well, whether in MA or AAA. Just take time, calm down, and read the questions well, and you're going to be good. Okay? Read it well and take your time. But you got to move with speed and accuracy so that you are able to go through a lot of the questions. You are not expected, you can't answer all the questions. But as much as possible, make sure you attempt as many of the questions as possible in that particular case. And Nuntina, you have to read through all the questions. Once you do that, by the grace of God, you should be able to go into the exam hall, write the exam with confidence, and most importantly, pass the examination. So that's it about that. Wish you all the best, and we'll see you some other time in April as your results is released and you've passed, and we go to another paper. And those of you who are graduating too, we'll meet you at graduation in that case. So that's it. I'll be on standby before tomorrow. So if there's anything that comes up you want to ask me about it, you can send a message about that, or I'll have you on a call and we'll deal with it. All right. So au revoir, and we will see you some other time. Bye bye.